This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about the market trade as we wrap up the week and head to the weekend, let's say hello to our good friend Chad Hart with Iowa State University, economist there, joining us today. Chad, always a pleasure to catch up with you, sir. How are you?
All right, doing well. How are you?
I am good, Chad. Thanks for the time, as always. Grain markets have changed quite a bit since the last time we talked here a couple of months back, Chad. We've seen a lot of premium come out of these markets. And looking at things wrapping up the week, plenty of news out there to discuss. I think top of mind, just to start, this UN brokered, Turkey brokered deal between Ukraine and Russia to get grain exports out of Ukraine being signed today. That seemed to be the reason for a late day sell-off Thursday, and then the wheat markets trading lower on Friday for the most part due to that deal, I think, being signed as well. So as you look at that news, Chad, what do you expect from this deal and its impact on the market?
Well, that's the deal. Signing this deal definitely does, let's create a news story that says, okay, the global feed markets are going to see a bit more supply coming out of the Black Sea region. I think the proof will be in the pudding. How long does this deal stay in place? How long does it last? But at least for now, what it's doing is it's providing some pricing relief to the global markets, giving some buyers out there, especially as we look at our international feed buyers, this gives them an opportunity to slide in and buy some relatively cheaper feed product, especially wheat, as we look out there, knowing full well that a deal like this, like I say, can disappear in a hurry, and we could see these prices rebound if this deal does fall apart in the future.
Well, I think, watching things, I know there's, it's two sides of the coin, right? There's a lot of skepticism from folks in the trade, farmers, ranchers, watching the markets saying, well, okay, how long is it going to take to demine the ports? Who's going to insure these ships, et cetera, et cetera? Will Russia uphold its end of the bargain? And then on the flip side, you have computers and algo traders reading the headline and trading the headline. And that's, I think a case of the battle that we're seeing here to wrap up the week, and we'll probably continue to see, Chad.
Well, but I would argue that's always been the battle within the markets. I mean, everybody is basically trying to be, if you can, one step ahead of the market, because that person that can be one step ahead of the market is likely going to take the profit for that day. And so we're always trying to figure out where are we going to go next and trying to get ahead of that. And that's part of the reaction today. The idea is that the market had been preparing for this signing. We've already worked prices down because of it. And we'll likely now, I think try to balance out, like I say, if and when does this deal fall apart? How long does this take? And how much grain possibly could move here? As you mentioned, just because we get the deal signed doesn't mean that, boom, suddenly grain is flowing again. There's plenty of logistical issues still to be worked out here. And you're talking about, this isn't just a two-way deal. As you mentioned, there are four parties within this deal: the Ukraine, Russia, the United Nations, and Turkey. And you need all four of those working in concert for this grain flow to really begin again.
Well, and we look as well, just staying on the export theme, but shifting to the U.S., it seems like there's starting to be a little worry in the market trade of sagging export demand here in the U.S. for grains, corn, soybeans. I know wheat has had a couple good weeks here ahead of this signing of this deal, but I know there's some chatter around the trade that there's a little worry just how sluggish exports are getting, and one has to wonder if that's really the case or if we're just in that summertime kind of lull period for exports, Chad.
Well, I think we're also entering a period of time when we do tend to see a little bit of pickup in those, let's call it advanced sales on the new crop. And you're right. I think there is some concern there when we're looking at, the export markets in general out of the U.S. You think back to the WASDE report recently, where USDA ended up downgrading those export potential as we're looking to new crop. But at the same time, too, I go back and I look at the weekly data that's showing us when you look at those advanced sales. Corn's running a little bit ahead of the 5-year average in terms of sales into the international marketplace. Beans is actually right now at a record level when we're looking at where we're at this time of the year, looking at those new crop sales. But it's true that we also haven't seen a lot of additional movement in that data over the past few weeks. Now, I've been talking to farmers and telling them from here till about, say, mid-August is a period of time to really watch those numbers for those advanced sales, because this is when we tend to see those international buyers ramp up those purchases right before harvest here. And what they're looking to take advantage of is that this tends to be the time of year when we see some of those lowering prices because of the new crop coming down the line. And we can see usually how big that crop's going to be, leading to lower prices, leading for those buying opportunities for those international purchasers.
Well, and to that caveat, the caveat to that, as we watch this new crop now through the growing season, weather's the other big factor, Chad. And we've had this heat and dryness in the western corn belt here now for a couple of weeks. Sounding like as we get into next week, we're going to have a cooler and wetter forecast for many, and that's given us a little pause in the trade to pull back. Although Friday's action in quarter beans maybe was a nice looking like a nice uptick into the weekend. But I look at this weather, the damage that's been done in the western corn belt. What are you hearing from farmers, especially west of the Missouri River? I know outside of Nebraska and maybe parts of South Dakota, Kansas, not a huge corn state, but still plenty there. I mean, what are you hearing? Because I'm seeing and hearing just some pretty rough looking corn west of the Missouri River.
Oh, yeah. I mean, definitely when you think about it, you just have to look at the drought monitor. You can see that as you move west of Missouri River, you do see more substantial drought conditions definitely impacting the crops out there. And as you mentioned, though, the idea is that, over the past few years, I would say the western side of the corn belt has been where we've seen more growth, but this is the year where we had some trouble planting out there. And so we did see acreage diminish this year in terms of that corn out there, but it's still highly drought stressed. But I'm going to tell you, where I'm worried more is actually the eastern corn belt, especially as we're looking into eastern Illinois into Indiana, where the drought conditions haven't been quite as strong. But the idea is you're talking about attacking a much more vital part of the corn and soybean production here in the U.S. And when we think about how these crops got planted this year, it was delayed. We have a much tighter window, if you will, that we planted into, which means as we pass through the tasseling and the pollination stages with the crops and that, getting into the soybean flowering, the idea is that what you're looking at here is a crop that I would argue is more sensitive to weather than the usual crop. And so I think we will see more volatility around pricing because we're trying to figure out just how much damage is potentially being done, especially given our track record the past couple of years of we've had weather problems, but still very strong production when it came to especially corn and soybeans.
Well, I should throw in there parts of Missouri, too, have been pretty drought-stressed, southern Missouri especially here lately. But it's a bit of a case of the haves and the have-nots, right, Chad? We look at Iowa specifically, other parts of Illinois outside of what you mentioned looking really good, southern Minnesota. You look at that area, and especially Iowa into western Illinois, that's usually that's corn country, and we know this, and that usually carries the national average yield. So you look at that area, I mean, we are starting to get dry, but from what I'm seeing and hearing, things are looking really good still, even with some of this heat stress coming in.
Oh, yeah. I mean, you look at the good to excellent ratings that come out of the crop progress reports, and especially for Iowa, incredibly strong. You're right. I mean, here I sit in Ames in the center part of the state. we're not under any sort of, drought conditions as far as the drought monitor is concerned. But the idea is you see what's like a beautiful crop, but you step out in the fields and you can see those drier soils underneath. And it gets worse as I move to Iowa's coast. As I move west or east, you can see that, as you mentioned, that the haves versus the have-nots. You can see where the rain has been and where it really hasn't. But the crop has held up, at least up to this point. You look at that, the national ratings are good. They're pretty much in line with what we saw last year. And last year was 177 bushels in beans and 50 plus bushels of on the soybean side. Or I'm sorry, 177 on the corn and, plus 50 on the bean side. So we saw some, like I say, very strong crops last year with drought conditions in place. We're looking at the same potential setup this year.
Well, Chad, looking at prices, obviously I mentioned this earlier, we've taken a lot of the war premium off here. We've really kind of come back down in levels. We're mid fives in corn on the board, mid 13s on the board, and soybeans here. Wheat, of course, has lost a lot. You take a look at just where levels are, some of the chart damage that has been done, farmers looking at some of these lower price levels, maybe they're saying, I didn't sell enough. It feels to me like this is maybe at least a point here where you maybe strongly consider, if you start to know what you have for a crop a little bit, to maybe lock some floors in possibly. It seems like now's the time in case we end up going lower for some reason, Chad.
Well, I look at it as it's a time to sort of reassess, but also think about, as you mentioned, looking to put in floors, but I want to give myself upside potential. And so this is a place where looking at things like put options, I think, makes sense as far as protecting that downside, but leaving yourself some upside potential here. You're right that the risk premium has sort of dried up. The prices we're staring at today are eerily similar to where we started at the beginning of the year. So we've seen the bubble, blow up and deflate over the course of the past several months. When I'm looking at the uncertainty, as we mentioned, with the international market, especially with what's happening in Ukraine, when I'm looking at the uncertainty we're seeing with the weather conditions, like I say, I want to leave that upside potential if I can, because I believe we will see some rallies as we're going forward throughout the fall and into the winter time, especially as things work their way out here. And so what do I want to do? Protect against further erosion on the prices. But like I say, leave some potential where I can price higher as we're moving forward. So looking at minimum price contracts, or like I say, the options in order to put in those price floors can make some sense now. But yeah, I want to leave that upside potential still there, because I think we've still got some room to play there.
Well, and on the flip side of that, if any producer feels like they've maybe oversold themselves on some new crop cash contracts, whatever the case may be, and they don't think they're going to have enough of a crop to cover themselves, I know they have some options to maybe get out, and maybe with prices coming down, they might even be able to get out of some of those cash contracts. I think it just remains to be seen, but I know there's a flip side to the story as well, with some folks maybe in that position if they got a little too aggressive with their marketing this spring.
Yeah, I mean, that's well, I always say this, whether it's a high price year or a low price year, whenever you feel that you've gotten out in front of your skis a little bit there, yeah, you want to have those discussions early and not late, because you have more options as to how you deal with that. And I think for a lot of producers, I'm going to say that most of them probably put themselves in the position of they marketed, a lot of what they thought they had, hopefully, prior to now. But let's face it, I think the drought has held a lot of people up from getting out too far out there in terms of that pre-harvest marketing. So my guess is we don't have as many farmers as usual out there feeling that they've marketed too much. If anything, now they probably feel that they're probably sitting just right. But I would say this is also a period of time where, especially as we move into August, like I say, you look at the seasonal pricing pattern, this is when we tend to see our lows here from, late July into basically September. And then we start to see things rebound back up again. So now's a good time to sit back, evaluate where you're at, and think about post-harvest pricing moves you might make, allowing things to sort of settle out here with that uncertainty when we're looking at especially the price moves. You think back over the past month, we've sort of been range bound a lot of cases. It's a wide range, but the idea is waiting for some of this uncertainty to be resolved.
Very true. Well, and then, that's new crop. Old crop's a totally different story. If I have any old crop left, man, I don't know if you haven't sold it, you probably should. I know a lot of end users are getting their needs met here. And we're starting to see, we've seen basis hold in well, but, we're starting to see basis erode a little bit across the countryside, Chad.
We definitely are. And, that's the deal. Yeah, I think with old crop, you're right that a lot of that ship has sailed. We know we need to clear out those bins, getting ready for the new crop coming in. And so, especially for those holding old crop still today, it may be the case of that, that old strategy of go ahead and sell it today, but maybe put a call option out there to try to, again, give yourself some more upside potential as we look further down the road.
Chad, as well, inflation, of course, is another big topic that's been in the market trade. We're waiting for next week for the Fed, presumably, to have another 75 basis point rate hike. We saw the European Central Bank with a 50 basis point rate hike earlier this week. So obviously, inflation playing into all of our markets, grains, livestock, everything, energies. But that's still something we have to watch closely as well. We can't forget about that.
It definitely is. And I would say that's part of the reason why there's that concern as we're looking at those export markets. Because this isn't just a U.S. problem. It is truly a global problem. We have seen these higher, especially energy prices, really weighing on consumer desires out there. And so until we basically see some, let's call it broad-based recovery on the energy side, I think we're going to be worried about inflation as we work through the rest of this year.
Well, let's segue into live cattle and feeder cattle here as we talk, Chad. We're speaking ahead of the release of the Cattle on Feed cattle inventory report and cold storage report Friday afternoon here. But I look at the cattle market specifically. There's a lot of folks who have a lot of optimism heading into the fourth quarter here with cattle, even though we're at some pretty elevated levels in both the fats and the feeders right now, Chad.
Yeah, and I think a lot of that is due to the thought that the reason we're at these elevated levels is because we have, if you will, pushed those cattle forward because of the drought conditions and the high feed costs. So that if you look at the first half here of 2022, we were looking at very strong production on the beef side, and we expect that to tail off as we move through the rest of this year into 2023. That's leading to, if you will, a tightening outlook deeper as we go out there and higher cattle prices as we look deeper. And that's what the futures market's been reflecting here for the past several weeks.
Well, and I think as well, we think about it and hear a lot about being friendly into the fourth quarter, but to me, it's another case of maybe getting some hedges in place in cattle if you haven't, and looking ahead because we may not get that friendliness we want, and these are some pretty elevated levels, Chad.
They are. Anytime you're staring at a $1.50 a pound out there on the fats, that's a pretty good price level to at least, like as you say, put in some floors to give ourselves some protection as we look out there. The other thing that's been striking to me, especially as we're talking about cattle and beef, has been that's the one place where we haven't seen any real export erosion yet. When I'm looking at beef exports, they're still chugging along at basically record levels right now. So international demand for beef remains very strong, even with the elevated prices we have right now.
Hog market real quick as well, Chad. This front month, these front month contracts, it's just been like a freight train. I mean, to me, I'm surprised we're continuing to stay up here, but I'm not going to get in front of this freight train as it continues to move forward here. This has been some impressive price action.
This has been some incredible price action. And yeah, I mean, if you're a pork producer, you wish you could bottle this and carry it forward. I think the problem, though, is, and this is what the futures market is sort of representing, is that we're short right now, but we know we're going to be long, especially as we get into the fourth quarter. And so you do see those prices, a lot of air comes out of that balloon as we're looking deeper into 2022. And here's where I'll point out that difference in the export markets. I mentioned beef being at still record levels. Well, pork is well off those record levels, is actually slightly below the 5-year average. And so we're not seeing that same sort of international demand spurt that we need to help maintain the pricing that we're seeing today.
Well, Chad, we're about out of time. I didn't even get to the energy markets or anything like that, but I will open it up to you. Floor is yours. Any other final thoughts? Anything else you want to reiterate for us here today?
Well, I do want to touch on the energy markets because I think they're one of the biggest things that's going to shape what ag is going to look like over the next 6 months. And probably the most, let's call it encouraging sign, if you're looking for lower energy prices, was that Nord Stream 1 did come back. Russia did open it up a bit here. So as we see an easing in, natural gas prices and gasoline and hopefully diesel prices down the road, that's going to help reduce some of that inflationary pressure we're worried about. And so that hopefully we can see consumer demand hold strong, and that will help create, let's call it the possibility of a softer landing for the economy. And that's what we're all hoping to see as we look out there, especially as the Fed ratchets up that interest rate to get inflation under control.
Yeah, great stuff there. And I know as well, farmers watching closely, gas and diesel prices, propane prices getting into this fall as well, nat gas, a lot to watch there. And I think you hit it on the head, and that's going to be a big driver moving forward. Chad, always appreciate the time, sir. We are up against the clock, but thank you so much for joining me again, and have a great weekend. We'll talk to you again real soon.
Thank you, sir. Have a good one.
Chad Hart with Iowa State University joining us here today on Market Talk. That's going to do it for the show on this Friday, July 22nd. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.